Hi, morning traders. Welcome to another session of Market Snapshot. And today being on Tuesday, we have some exciting plays as we can see on our screen. And ideally, we really need to look at opportunities in the market. The euro, we need to look at what the USD is doing. But ideally, let's look at early in the morning, the kind of news that we're playing out. Not so much of red folders, but then again, we have some euro news coming out later from 12. And so we are more focused on the CPI, the inflation rate. Basically, remember, CPI measures the inflation rate, the rate at which the prices of goods and services are increasing, right? And so previous number was 2.6% over here. So the forecast is the numbers. This is the expectation from traders. Is that the number will be 2.5%. So a reduction in interest in inflation means that the ECB, the European Central Bank, will be looking at rate cuts. Yeah. So that's something that we're really interested in seeing how this plays out in the next, is it 54 minutes? And so we look at our charts and see possible technicals on this angle. And then, of course, we have the ECB President Lagarde speaking. The European Central Bank President will be speaking at 4:30. Maybe she'll be addressing the inflation and what that means for the Eurozone. And so that will be an interesting play. There's also then this, at the same time, Fed Chair Powell will be speaking. And it's interesting that the job openings will be coming out later. All right. And so what we really need to look at is the volatility that will come out today. We could see a lot of volatility today as we seek to see how the market will react to these plays, especially the Fed Chair Powell. You guys, you know that meme where when Fed Chair appears some podium and all of a sudden the markets run helter, right? So that's a possibility that could come in. So those guys who are trading the euro, we'll have a look at that, what the technicals are saying apart from the fundamentals, and see where the opportunities will probably be in. And now let's look at the JOLTS job openings also. Basically, this refers to the number of job openings excluding the farming industry. And so it's a very key indicator, because ideally here you're looking at jobs, manufacturers, the Fed, municipal governments, so it's a whole lot of job opportunities. And how does this affect us as traders? So ideally, it outlines a list of job vacancies, right? And so hirings. And so when you look at that, it shows you the health of the labor market, right? Because ideally, if there's a high number of job openings, then it indicates a robust labor market, right? And that means that the economy is growing, because the economy cannot, if an economy is not growing, there's a high chance that jobs will not be created, right? And so when the economy is growing, that means investors are happy, and so the strengthening of the US dollar. However, if there's a decrease in the job openings, then it could signal that the economy is slowing down, and that could lead to the weakening of the dollar. So if you look at these numbers over here, the forecast, we can see a reduction. So from what traders are expecting is that there will be a reduction in the number of vacancies, job vacancies. So clearly that tells you the economy is probably not doing so well, if we go by what traders are saying. So if these numbers come out higher than this number and even higher than this one, the dollar will strengthen, will really strengthen, right? However, if the numbers come lower than this, then maybe 7.85, 7.8, or anything lower, then we should see the weakening of the dollar, right? Because that tells you that the reason why maybe there wasn't so much job vacancies is because the economy is not doing so well. Guys are not ready to hire guys, because, of so many factors, including the poor state of the US economy. So it's really important as traders, because it helps in the interest rate decisions. When there's high, you see, when there are high job opportunities, high vacancies, due to wage, guys are getting employed. When guys get employed, they have money to spend. This could adversely affect the inflation, right? So ideally, this is where now the whole issue on rate hikes or rate cuts will come in. And so as traders, we need to keep an eye on this. However, the JOLTS job openings should be looked in a bigger context, including the NFP guys. Remember yesterday I said this is the NFP week, and also the unemployment rate, to have a conclusive decision on that. So in conclusion, we can just say that basically the job openings gives us an opportunity. It's a trading. It gives us quite a great opportunity to get into the market. And so a big number, like we've said for a recap, a higher number than 7.86, if we see maybe 8 or something, or even higher number than this one, will lead to a very strong dollar. However, if the numbers come out lower, then we should expect a weaker dollar. And so our work is to make sure that once more we have risk management strategies in place, which is what we'll be discussing in a few. So let's go to our charts now with that understanding and with the knowledge of what is playing out. Remember, the purpose of this market snapshot is someone who's coming in and maybe they didn't know there was some news coming in, and they're able to figure it out and say, hey, by the way, I was in a position, so maybe you evaluate your positions, or you manage your trades by moving your stop loss or something. Or if you didn't choose a stop loss, then now you know your trade is at risk, right? So let's go to our charts and figure out what the technicals are saying. Kindly come in and let's have a look at a lot of opportunities that have presented themselves. My apologies for that network hitch. We all understand stations in Kenya right now. Sorry. So we want to go to our MT5 to have a better understanding of what the technicals are saying. So ideally, we would want everyone to go for MT5. It's more advanced as compared to MT4. The MT5 is more advanced. And so if we look at what we had yesterday, we were looking at, let's look at the Euro USD. So yesterday, we had Euro USD in play, right? And during yesterday's analysis, we were looking at an opportunity for Euro USD to rise to 1.0803. But then again, we can see price got to 1.0774 thereabout, and then we can see the drop. So we were interested in this gap. Remember the conversation we had yesterday? We were interested in the closing of this gap. This gap has been closed. If you look at this market price over here, that spike has closed that gap. So officially, I tend to believe we should be looking for opportunities to buy the Euro USD because I'm still stuck at this price level, 1.0803. And so this could probably play out right now, maybe during the CPI. Right, so we could see probably a shoot up and then maybe a drop. However, our work as traders, remember once again, is to seek confirmations before we take trades. But for those guys who are shorting yesterday, trying to trade this gap, maybe now they've booked their profits, and now maybe you could see another market move. So for the Euro USD, now that we have that, I'm still looking for opportunities for Euro USD to probably come to what we have. So nothing changes on my end. I will still want to see a test of this price level. If that will be, for me, that will be a great entry, because there's some resistance that we had mapped out yesterday on H4. Maybe we can go back to this. We were looking at this order block. We were looking at this candle here, which was the last bearish candle before a major drop. And so if that was to play out, then we could see a test of this low, a test of last week's low. Right. So ideally, that's what I have on Euro USD. So sorry, yes, so I'm looking for opportunities to go long on this currency, if the opportunities present themselves, because ideally, like I've said, I would really seek a push to 1.0800, 1.803 or thereabout. That's an area I'm looking at. Now let's look at USDCHF. Yesterday, we were looking for opportunities to buy USDCHF, and we can see that has played out. So this was the analysis we were looking at, but we still wanted to reach. Now that was the analysis. We should probably see a bullish move to 0.9083. Now this is where now we've seen the job openings, and maybe we could see a test of that high maybe later, as maybe the dollar strengthens as we go into New York session. However, we could see a drop first. Ideally, I would want to see maybe a drop, a bearish move before a bullish move, right? We could see a retracement on this one. If we go to M15, yeah, maybe we'll do, I will be interested to see whether USDCHF will probably come down to test these lows, the Asian low, right? Either that, or let's go to H1. Yeah, more of the Asian low. It will be interesting to see how USDCHF reacts to that. However, maybe we could see also something here. Maybe I can draw another area that will be of interest to me. 89.93. This is something. This is something that I would want to see tested before now the bullish move. Remember, when we did our analysis yesterday, so guys, please refer to the video I did yesterday. I was looking at this order block over here as an area where we could be looking for some sellers lined up over here. But in the meantime, really, I would really want to see faster retracement, a bearish push on USDCHF. So if we were to map it out afresh, maybe we can map it out afresh actually. So let's do this. So we go to lower time frames for a better outlook. Maybe go to H4. So I'll be mapping out this order block over here. That one over there. So if I go to lower time frames, I would really want to see maybe a bearish push before now a bullish push. So if we go to H4, I'm still interested in this price level. So a bearish push and then maybe a bullish push. that that is something that I would really want to see on USDCHF. It will be interesting to see how price reacts to those levels that have drawn up. Yeah, and then of course now let's look at GBPUSD. So GBPUSD, the analysis went to script as per yesterday. So yesterday we were, if you look at the analysis, we were looking for opportunities to go short at 27.02. So at that point in time, probably we were around somewhere over here. So I was looking for a bullish push and then a bearish push for 50 pips intraday. This was more of an intraday position, but we can see, the bearish push playing out right over here. So we can see that spike that hit that target price, and then we can see now the bears that came in after that. So ideally, we should expect a bearish. We should expect a bearish push, but before the bearish push, maybe we could see a bullish move. We could see a bullish move. So let's remove everything now that our price was hit. Okay. So maybe we can see what I would want to see is a test of the Asian high. Maybe this high over here. Maybe a test of that. Or we could even see another area of interest is this one over there. 2664, 2651. So those are areas I would be interested to see on USD, on GBPUSD, sorry. And then last week's low. That. So I would want to see maybe a bullish push, either to that or to that price level. I would want to see that bullish push, and then maybe a bearish push, something of the sort. At least that's what I would want to see on GBPUSD. Okay, let's look at Bitcoin. So Bitcoin, remember that my conversation has been simple. We looked at this yesterday. It has come to an area we've mapped out for quite some time. So this still holds. My outlook on Bitcoin, once again, I keep repeating, doesn't change. I'm waiting for Bitcoin at 51,743. When it comes there, then that will give me maybe, I'll look for my confirmations and I'll go long on BTC. UT100. So yesterday we were looking for opportunities to short UT100. So the first take profit was around here. So we can see the white line. My first take profit was here. And we can see this drop played out very well. The first instance it hit our area of support. We can see buyers pushing the sellers up, and then there was that push by the sellers, but then again the buyers took control. So I'll still maintain this analysis, maybe a continuation of this downtrend to this area 19461. Yeah, so I still maintain that as our analysis. Okay, that's Bitcoin. Audi USD, what was the analysis on Audi USD? So analysis on Audi USD, we were looking for a bullish push to 67.04 yesterday and then a drop. Price didn't get to that level, and so we can see price tested Friday's high, and so the sellers there pushed the market down to where we are. So just like we've seen on the rest of the pairs, let's remove this analysis. Just like we've seen in the rest of the pairs, I'm looking for a bullish push before the bearish play comes in. So I would really want to see maybe yesterday's high tested. So I will be interested to see uh, how the USD reacts to that area, and then maybe if we go to maybe a test of that before H4. Can we see something on H4? Yeah, we can see since AU is quite sluggish. I would what I would want to see is probably a test of this low before now, maybe a continuation of the bullish move. Remember, guys, we have NFP this week, and it's one of those weeks where, like, you could easily blow your account if you're not careful. Huh? So just make sure that you understand the plays. Huh? So maybe we could see a bullish move and then a bearish move. Alternatively, we could see a bearish move to this low and then a bullish move. So those are the two possibilities that could play out on AUD/USD. AUD/USD for me doesn't give me a clear-cut thing. Gold, we were looking for two areas. We were looking for opportunities to buy. We were looking for opportunities to buy to 2340 and then drop. So clearly, the buy played out, but then didn't get to 2340 as expected. But then the bears came in, didn't get to 2318 as expected. So price is still in this range. We can see a range over here from Friday, Monday, and then maybe Tuesday. So we could see a breakout of this, and maybe I'm looking forward to a breakout to the downside, at least maybe. However, we could see yeah, maybe the analysis still remains. I'm looking forward to these short opportunities, but then again, since price didn't get to 2340, let's see whether gold will get to 2340 today before maybe we see sellers coming in. Maybe USD/JPY. USD/JPY has been on a bullish run. Let's look at higher time frames. So I'll remove everything. Okay. So H4. Maybe we can see USD/JPY test last week's high, and then we could see probably a potential bearish push. However, the yen continues to be weak. So ideally, intraday, I'll probably anticipate this. Short opportunity from 161.75 or 161.74. So that will be my outlook on USD JPY. What about USD card? Let's remove everything. Yesterday we didn't have a look at USD card, right? So let's have a look at it. So we go to H4. If we go to H4, then I'm looking at last week's high. 1.3763. let's see how price reacts once it gets there. So if price gets to that price level, we should see bears coming in. Let's go to H1. So I'll be looking at a possible take profit at this order block over here. So the analysis on USD card probably on my end is we should probably see a bullish push to 1.3763 and then a bearish move. That's what I have on USD card. That's just about it from my end. Any questions? Let's see your questions, guys. Apollo, Euro USD analysis, J Squad TV. I've shared the Euro USD analysis. Kindly have a look at that towards the start. J Squad. Robert, can you explain how US Treasury yields affect gold prices? Yeah. Okay. So, Michael, you really need to understand what the yields are, right? So when you buy, let's say, uh, a treasury bond or a bill, yes, treasury bond or bill, what is your expectation? What do you expect from that? Yes, you expect that you'll get some returns, right? So ideally, if you're expecting returns, remember this is the government that is paying you. It's using the treasury bills and bonds to to fund its programs, to fund its programs. And so you really need to make sure that when you're investing in some of these investments, like for example, how money market funds invest our cash. Anytime you maybe invest in a market MMF, money market fund, yeah. So basically, it gives an opportunity for you to earn a certain percentage, but these guys are earning so much more on that. So treasury bills, when the yields and the gold prices, they are, is it inversely? That kizungu is coming in. So if the returns are high, then the gold prices will of course be high, right? Yeah. Any other question? They have an inverse relationship basically. Yeah. Sorry. Any other question? So treasury yields will always be having an inverse relation. When they are high, the gold prices will be low. When the treasury yields are low, the prices of gold will be high. I think this is take us through your analysis on DXY. Okay, DXY. Let's have a look at it. DXY is supposed to be here. Pixels on your chart, especially the prices are not visible. Okay, I'll work on that. I'll see how that. Thank you, Joseph, for that feedback. Uh, so let's look at the DXY. This is even far much worse. Yeah. too much light on my end. So let's have a look at Nikkei plus RSI. Okay, so the DXY has been hitting highs, and so ideally I would still expect a bullish dollar, which is what maybe we've seen on the long term. We can see on H1 we have these highs. Let's go to H4. Yeah, so we expect the dollar index to be bullish, to go to 105.77. At least that's what I can see from my end. Then maybe from there we can see maybe if the sellers there will be strong enough to push the market down. But then again, this is NFP week, guys. Be wary on that. That's my intraday play. Ambien, is it Ambien who has asked that question? Then yeah, 105.77. So is it a buy or a sell for Euro USD? Listen, look at my analysis. I'll still maintain this analysis. I'm still waiting for Euro USD to test 1.0800 before we can see the bearish play. Then again, I could be so wrong, guys. So remember at 12, I've said at 12 we have the CPI, right? There's a CPI reading at 12. That could be impactful. So if the CPI readings come higher than the inflation, the 2.5, I think we've seen percent. If it comes out at 2.7, then the euro will hike. We'll expect the euro to go up. Yeah, so make sure that we've seen the gap has closed. So this gap literally is what we were expecting as traders. We were really looking into it, and that tells us that with that close, then we should see a lot of now buyers coming in. However, we could see a push to the downside also. It's a possibility. But then again, once again, remember, we tend to stick to what works. Like for me in my end, I would really want to see that push to 1.0800 before now a bearish push to 1.0713. Yeah, at least that will be an easy play on my end. That's Euro USD. So guys, make sure that you review these analyses. We've looked at maybe USDCHF, and we've seen we need to see that bearish push play out, and basically have that bullish run. And this could be in line with maybe we've just looked at the DXY. Sindo, the DXY is showing some bit of a bullish push is expected on our end, and so let's see how that plays out, because as traders, we can all agree, if you're a trader, your work is to project and then wait for that analysis to play out as per your projection, right? That's our work as traders. That's the most important job that you have, is to wait. At times you will see awesome setups and you will not even take them because, one, they're not in line with your analysis. Two, they are not where you'll expect them to be in terms of your confluences, right? So there's still something missing. So your work is to really, really, really wait. Be patient. I think we make more money when we are patient, to have those high probability trades come into play, rather than rushing in to take all manner of trades and you take a hit. So I mean, let's just wait for setups, right? So let me see. There's some questions over here. Welcome, Rufus. I see a lot of questions that I've not yet covered. Let me try and see. tuko na yeye hapa pale akia nani? Where is Rufus? Okay. Rufus will be joining us during market during market at a glance. Yeah, I'm trying to look at some of the questions I've not handled, guys. So is there any question? Maybe someone can let me know if there's a question I've not handled. As we call it a day, I know you guys, there are some place you need to be, for lack of a better analogy. Yeah. Okay. Okay. Okay, guys, I think that's it. I see a question here. Let me see. Sorry, there's a question I can see from Apollo. What about GBPUSD? I've shared the GBPUSD. Any relationship between CPI and some of the leading indices, such as the US CRB index? US CRB index? Okay. Uh, that I'm not. It's not clear on what you mean by. Norbert is here. I think Norbert is answering a question over here. Talk of US yield curve inversion. How will this affect stocks, DXY, and has this any effect affected by budget deficit? Okay. An inverted yield curve. This is where short-term interest rates are higher than the long-term rates, right? It's more of an indicator of economic recession, right? So, of course, an inverted yield curve, in this case, in this particular situation, leads to negative investor sentiment. So guys are like, "Hey, manze, apana, why should we keep our sight on this in terms of investing instead of looking at the long-term rates, huh? And so it signals a potential economic slowdown and recession, and that means lower stock prices. Yeah. So an inverted yield curve actually leads to stock prices that are at a lower price. And so in this case, companies, they might face higher borrowing costs, in the short term, of course, exactly, right? Because I mean, if you're borrowing, we all know about overdrafts, where you borrow. Most companies survive on overdrafts, even to pay salaries, right? So that means it will squeeze your profit margins. And you see, when guys realize you are in distress, your stock prices will take a tank. The short sellers will come in big. With regard to dollar index, I think it leads to investors to seek safe havens, and basically, of course, guys will go for the dollar. The dollar is a safe haven in this example, right? So the guys will buy the dollar more. Yeah. Of course, when the inverted yield curve, it increases the government's borrowing costs. Remember, if you look at Kenya, look at what I think Kenya, we have 16% interest on the treasury bills, the 3 months one. So, guys, that's a high expense. Imagine if you invest in 1 million Kenyan shillings in the treasury bills, you get a return of 160,000 Kenyan shillings. Compare within 3 months. Now compare that with all these other areas. So the government is paying a lot of money. Yeah. So that means the budget deficit keeps increasing, right? Yeah. So budget in increase. Okay, I think I've answered that. Any other question? Okay, guys, thank you for your time. Let's see how the market plays out. I think I've covered everything. If there's anyone, yeah, I think I've covered all your questions, guys. If I have not, then my apologies. But it seems like I've covered everything. So thank you guys for your time. Cheers. Have a great day and be safe.